Hey everyone, thanks a lot for tuning in today. This is Crypto Vatsik. I'd really appreciate it if you hit that like button to support the channel, and if you find this content really helpful, please don't forget to subscribe so you don't miss out on future updates. As always, this is not financial advice and are my opinions only. All right, let's get into it. Okay, today's an educational video on the fundamentals of relative strength index, how to spot bullish or bearish divergences, and identifying these hugely opportunistic times is critical because it can signal major trend reversals, and if used correctly, it can allow you to get in a lot earlier than others in the market. Okay, so I'm going to cover bullish divergence, bearish divergence, hidden bullish and bearish divergences, and also some market structure theory that can really boost your level of understanding of this indicator right down here. Okay, so really quickly, what is relative strength index other than this purple line down here? Okay, it's a momentum indicator that measures the magnitude of price action to indicate oversold or overbought territory or conditions of the price, okay, of an asset. So this indicator is on almost every trading platform. You can find it under the indicators tab. They all look like this, as some sort of oscillator at the bottom of the price chart. You can edit it as you see fit, but this oscillator at the bottom really just moves with price. Above the 70th percentile is considered overbought territory, and below the 30th percentile is considered oversold territory. Okay, it's not guaranteed, it's just a zone, it's just a condition prediction. Okay, so otherwise it bounces between 30 and 70 in this range, ping-ponging around on support and resistance of this EQ. Okay, so as with other indicators, it's in its nature to be delayed. It's showing price history, not future. Okay, it's showing past price. Once a candle closes, the indicator reacts. Okay, so in its nature, that's one of the limitations, is that it is delayed. Okay, but only slightly. So basically, you just got to keep that in mind. It's not a guarantee. If it is in overbought territory, doesn't mean you blindly sell or short, and it's just vice versa. If it's an oversold territory, doesn't mean you blindly buy or go long. Okay. Now, typically, the stronger the reaction or move in price, the stronger the magnitude of the move, right? So the likely scenario is the stronger the reaction RSI will have, and vice versa. The stronger the dump, the stronger sharp reaction in RSI you will see. Now, I'm sure everyone's used this oscillator or use this indicator and they've seen it and they go, I know what RSI is, right? So I'll just get right into examples of these bullish divergences, hidden bullish divergences, and so forth, just to show you what I'm seeing and to really help you spot these in the future. Okay, right off the bat, we'll cover bullish divergence. These are the conditions for bullish divergence. Okay, lower low in price, higher low in RSI, and the other condition is that you measure from the lows. Okay. So let's just go here. We got Bitcoin USDT on the one day on Coinbase. Really easy to spot is to just find basically a higher low in RSI on the lows. Okay, so there's a higher low there. It's very slight, but you can see it. Okay, and you can see it there, right? And what did we do? We made a lower low, confident lower low in price. Okay, so right there, we made our low in RSI, low in price, lower low in price, higher low in RSI. Okay, and then what did we get? We got a pretty decent bounce here. We are in a bear market, so obviously it came right back down afterwards, but would have been a great move up to 20% if you had caught it. And obviously hindsight's 2020. So you're trying to find this, during price action. When you see this sharp bounce here on RSI and you see a bounce here, that's your trigger to get long, right? To take advantage of this and take some risk, right? So this would have been a good play, and that's what you're looking for, is make that lower low in price and then higher low in RSI, and then you get in, and you'd have to have some clear targets, which I won't get into in this video, but we're just going to go through these examples. Okay, on to the next example here. Let's go back to this previous bottom that we had in July last year. Okay, lower lows in price, higher lows in RSI. Okay. And so you might have got caught up here because we're making higher lows here already in RSI and lower lows, and you had these bounces right here, decent bounces. So if you're scalping, these would have been good play. But if you're looking on a more macro scale, you would see these two major bottoms in RSI, right? So the major macro bottom over here, and then our next major bottom here. But if you compare those two prices, the price bottom to candle closed up here at 36,692, then the next candle closed down here at 29,831. Okay, and so major spike there, and then obviously you can see what that led to. Okay, moving on, next example, we'll do one more here. Go back a bit further. Okay, there we go. There's a decent one. Higher low in RSI, confident, considerably significant, and lower low in price. Okay, candle closed lower than this previous low, RSI higher, back into the range. See what it led to. Yeah, it was temporary. We were in a bear market. Got to be careful of that. There's environmental conditions, but could have led to a potential of 56% move, maximum of 56% move. All right, I think that covers bullish divergence. Now let's get into some bearish divergence here. Okay, moving on to bearish divergence. These are the conditions for bearish divergence. We make higher highs in price and lower highs in RSI. And we're measuring this time from the peaks, okay, because we're making higher highs and lower highs. So let's just go to the previous top that we just had on Bitcoin, okay, back in November. What did we see? This would have helped so many people if you could have recognized this. Oh, we're making higher high, we're going 100K, but what's RSI doing? We're making lower highs, okay? Definitely, this is a confident, significant red flag, okay, that this is a top formation, and this is a weakening trend, and this should have been a telling sign that we're headed down, okay? And so that could have helped a lot of people get out of the market or start to, take some risk, de-risk some of their positions, at least at that point, right? And, let's just go back to the previous high or previous peak that we had before that. Oh, look at that. Bitcoin's making higher highs, and higher highs, and actually higher lows. Bull market, right? Going to 100K. What's RSI doing? Lower highs, consistent lower highs. There's actually two lower highs after our first peak up here, okay? So even though we made two more higher highs, that would have tricked a lot of people out. They wake up, they see the prices at 61,000, then 64,000. Holy smokes, they get excited, they keep buying, but RSI, meanwhile, is weakening. The trend is weakening, the move is weakening, and you could expect a drop, okay? All right, those are pretty simple, but they can seriously help you. As you can see, they can help you identify major tops and major bottoms, okay? When we just did bullish divergence here, they can really give you that edge, right, to get in before a major spike or a major drop, right? So do what you will with that information if you're looking to short or you're looking to long, whatever it may be, but that is something that will seriously help your trading if you can identify that quicker. So let's move on now to hidden bullish divergence. All right, hidden bullish divergence. Now, a little bit tougher to find. Usually in strong trends, we can find it though. We make higher lows in price with lower lows in RSI. Okay, higher lows in price, lower lows in RSI, and we're measuring from the lows. Okay, measuring from the lows. Spelled from wrong. Okay, so let's go to let's go to this bull market that we had, this first major wave out of the bear market back in May, June 2019. Okay, right off the bat, I can spot a couple right here. Okay, so let's just do this. Can you spot it? Where are we making higher lows in price and lower lows in RSI? Well, there's one right here. Higher lows in price, lower lows in RSI. Okay, and since we're talking lows, we're measuring from the lows. We're not taking the line and drawing from the peaks. We're taking it from the lows. So consistent higher lows, though minimal, pretty insignificant, I would say, but technically higher lows and definitely lower lows in RSI. Okay, so major spike here after that. And then what did we do? Well, we just did it again. Higher lows in price. So yeah, and then lower lows on RSI from the lows. Okay, you see that? And then what did it lead to, right? Two really good examples. And obviously this was a bull market, so you'd say, oh, we're just in a bull market anyways, but this can help you identify when that next impulse wave or that next wave up could begin from. Okay, so that makes sense. Bring this back over. We got that hidden bullish divergence covered. Okay, now let's go to hidden bearish divergence. Okay, hidden bearish divergence conditions. Lower highs in price and higher highs in RSI. So we're measuring from the peaks since we're making lower highs and higher highs. And similar to hidden bullish divergence, you see them often in bullish trends, right? Because you're making higher highs in price. So just like that, the vice versa, hidden bearish divergence, we're going to be likely in a bearish market, right? So this is where people get tricked out thinking that we've bottomed, and we haven't. Okay, so we're making lower highs in price in a bear market and then higher highs in RSI. Okay, and so let's go to our classic 2018 bear market. And let's just see what we're doing. So when a lot of people might have thought we had potentially bottomed out, here's a great example, okay? Right here, can you see it? Probably would have thought we had bottomed out potentially, right? We have a high in price, a lower high in price, okay? So if you're sitting here and you're going, oh, we're coming back down, lower high, right? So it's obviously established, and then you can go to RSI and go, look at that, a higher high in RSI, warning signal, okay? Can you see that? And this would have faked a lot of people out thinking, hey, we've bottomed, we've had our bear market, I'm buying, let's come back. And then you can see we came all the way back down to that base and then even had our capitulation event after that, okay? So if you use this properly, it can really help you identify either fake trend reversal or actual trend reversals, okay? And so it's key to use this objectively and keep the emotions out of it and be patient with it, okay? So that's hidden bearish divergence. Now there's one other thing I want to cover off before we conclude this video is essentially using RSI to also help identify, help give you confluence in identifying market structure breaks. Okay, so like in price, I've talked in my videos many times about market structure breaks and how to identify trend reversals using that, like basically just price in a market structure break of price, but you can also use RSI to do that. So what do I mean by that? So let's go to a bottom where we had a really significant market structure break. Okay, so we had this massive bottom here that pushed us to our all-time high on Bitcoin back when we in July, I think, yeah, July. So what did we do here? Okay, so let's zoom in. Let's go even on the 6 hour here. You're really trying to identify this. Let me find it. Okay, right here. So we're zoomed in on the 6 hour to really help us spot this earlier. High time frame, it's easy to spot, but sometimes if you want to get in a little bit earlier than others, you gotta zoom in a little bit. Stick into the high time frame so you can identify it. But anyways, we're on the 6 hour, and what did we see? Okay, so in my other videos, I talk about market structure breaks in price, right? So basically making lower highs, lower highs, lower highs, and then whoops, what did we do? We cracked these lower highs here. Okay, so we made lower highs, lower highs, lower high, dropped quite far down, had our big dip, and then significant buyback, area of demand down here, and then we cracked these lower highs. We made a higher high. Okay, so that's just your typical market structure break. Now let's go back and look what RSI was doing. Lower highs in RSI, lower highs in RSI, lower highs in RSI. And what did we do? We cracked it. Okay, so we'll just go in between these two levels. You could also take it probably from this guy right here over, okay, that peak or this peak. Okay, so there's just lower highs, right? So RSI smashed up, cracked this lower high here, making a higher high, and then actually cracked this one over here as well, and then retested it, bullish retest on support, confirming a trend reversal. Okay, so you saw it in price, we cracked the higher high, multiple candle closes above, okay, bullish retest, and then obviously we know what happened after that, but you can also use RSI to just help solidify your thesis and solidify some confluence that you've seen this market structure break. This is definitely a temporary reversal in the trend of this downtrend, right? So now we're headed straight back up, and almost just was basically straight back up. So very strong reversal signal, and just another way of using RSI to help you identify these trend reversals. All right, I want to thank you everyone for joining. I really appreciate the support. I hope this video was helpful to you in some way, and I hope to see you on the next one. Please do like the video and give me a subscription, and go follow me on Twitter at CryptoVatsik if you did enjoy this, and we'll see you on the next one. All right, cheers.